Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rourke with Mark Schultz of Northstar Commodity. We had a lower day for the most part in the livestock futures. Grain traded the plus side led by soybeans, which, Mark, we made new highs for the move, I believe, and new high closes for the move. We're getting a push here from talk that China's maybe going to extend this trade truce by at least a year.
Yeah, President Trump heads to China in the first week of April. There's a lot of chatter here today that we would likely start seeing some type of an agreement and a trade truce being developed and in writing when this meeting does occur. So I think that's a positive sign for us. Obviously, China's made a comment, or President Trump made a comment, that China would be buying another 8 million metric tons of beans yet this year. Now, whether it's this year or whether it's going to be this marketing year remains to be seen. But regardless, it would be an increase of bean purchases. And also they would hike up the bean purchases the following year as well. So those were all good signs that we have seen here over the last 5 to 6 trading days, and certainly gave the bean market a pretty good boost to the upside.
For sure. This 8 million metric tons, though, the president has said it's going to be old crop business. The timing of that is really important. If you get that now versus at the end of this marketing year, makes a big difference, doesn't it?
Well, if you get it into this marketing year, it does make a bigger difference. But I would say even if it ended up being split 50-50, it's still going to be a positive sign for the market in here. So it gives you a chance to boost prices back on up in here. And the other one would just be on the size of the crop. And I think maybe in the case of both South America, I think you probably have seen potentially, I believe, the high production numbers are probably in right now. I don't think it comes down much, but at this point, but I think at least it probably trickles a little bit lower on production, or at least steady on the production out of South America. So anyway you cut it, it's going to be at least a little bit of helpful here, because you're probably, if it goes 8 million metric tons this calendar year, probably brings your carryout closer to maybe 250 million bushel. If it's split half and half, you probably get at least under maybe 300 million bushel being carried out. So it certainly builds the character or the market scenario that now a weather issue here in the U.S. could be a much more friendlier outlook for the price.
And Mark, talking about the South American numbers, we did get CONAB out with Brazil's crop estimate on soybeans today anyways, and looked like it was unchanged at 178. But Argentina soybean crop ratings are coming down. Is that right?
Yeah, it looks like this Argentine crop ratings slipped again, another 7 to 8% in the good to excellent category. It's still better than last year as far as ratings are concerned, but going down another 7 to 8% following a week that they saw at least some beneficial rain across parts of the southern areas that were dry in Argentina. Does beg a little bit of a question. Now there's more rain in the forecast for Argentina. Watch that closely, because if that falls short again and we go back to something warmer, drier, it will be a more friendly atmosphere for the soybean market. I think also you might have had a little bit of a uneasiness happening down in Argentina, where workers are wanting to go on strike because of wages and looking for more money on that front. So that may have kicked in a little bit as well.
All right, technically, as I said, with the new high close for the move here, can we go back up and retest the November highs, or where's our next resistance area?
Well, you're going to have the resistance up at the November high. So if we take that out, then I would suspect you've got a market that would potentially lead you up towards that 1195 to 1205 area would be the next upside target on the beans. So it looks like it's hard to believe that you could go that much higher at this point. But as I've said, if you get now some fundamentals right where there's more bean purchases being made than everybody anticipated, couple that with any type of a weather problem that may hurt the crops in South America, or at least prevent it from getting any larger, now you've got something that maybe gets a little more bullish atmosphere underneath that soybean complex.
Absolutely. Have there been a lot of farmer sales here on the run up here in the beans?
Oh yeah, I think the farmer selling has been significant on this move. In fact, a lot of it probably got done even at lower levels than where we're at the present time. And prior to that, they probably were pretty good looking sales. But yeah, it's not only one chance; you've had two chances now in which to start pricing out beans more or less in the cash market, 10.80 to a little over $11 a bushel, pretty much across the country.
Corn market was also up. We're still in our trading range, but are we following soybeans or wheat, or was this a push from those strong exports this morning?
Maybe a little bit of both, but I do like the fact that the demand has been ferocious for the corn. Now we're already almost at 2.4 billion bushels of corn on the books that has been sold. That's a big number for this early in the season. We still got 7 months to go. So you've got a ways to go here on this, and the buying continues to go at a very rapid pace. So that is good to see. Now, I've always been a strong believer. The beans maybe help the corn a little bit, but I still believe that is the wheat market is the one to watch. And the wheat market actually was the strongest one of them all today, up 14 to 15 cents in both Kansas City and Chicago. And if I look around, there's really nothing that's really friendly or bullish as far as weather's concerned. Now, maybe a little bit too cold over in Russia, Ukraine might have done some winter kill. I don't think we did much here in the U.S. on winter kill. In fact, actually, it's been getting so much warmer. I kind of think the wheat might come out of dormancy a little bit quicker than normal.
So if we get this wheat market now here above these resistance areas and you have a chart break, can you finally get the funds to puke out of this massive short that they've been in for like 2 years or not?
Well, they've been short for a long time. It has been the whipping post. Is if you want to go short the wheat market. I would say, time and distance is kind of interesting. You brought this up, and I was thinking about this earlier today, talking to one of my customers, and I said, it's been 2 years that we really haven't had a crop problem to speak of anywhere in the world, basically. Yeah. And I said, you're pushing your luck. Somewhere along the line, something's not going to go quite right. And we're going to start seeing something maybe a little bit more negative, and weather's going to come back in to be a market factor in here down the road. So watch that. I mean, I think we're way too early yet, but I've seen this happen before. 1996 is one of them that comes to my mind of that I've seen business going. And actually, believe it or not, seen markets bottom at about this week, and then another secondary low came in, and the explosive move happened in about the middle of March to the upside, and it was all demand driven, and then just a slight weather problem catapulted that market sharply higher.
All right, well, the wheat's been in the doldrums for a really long time, so let's hope for that. Let's talk about the cattle market. We did see a setback. Is that just some profit taking because we can't seem to get through last week's highs?
Yeah, I think that. I mean, it's a pretty good move up yesterday. And here we kind of toned it down just a little bit. I think this is a wait and see. We haven't seen any cash trade really being reported. Box beef prices have been slowly trickling down. In fact, they're at the quoted to be down to the lowest level in 10 days. So the packer margins continue to go more deeper into the red. So I think it's a wait and see whether or not the cash at the packer pays up. And that's what he has been doing the last 3 weeks, as he's been paying up handsomely on a Friday out here. If the cash is stronger, the futures are going to hold together quite nicely, I would suspect. If the cash comes in weaker, then I think you could start seeing a more of a downward stroke as far as the price is concerned in beef.
The weaker stock market probably spilled over a little bit too, though.
Oh, yeah, it certainly didn't help matters much, but I would also point out that this warm weather that we've experienced, and not so much up and down the East Coast, but at least here in the Midwest, you're probably going to start the grill season the way this is looking a little bit sooner than normal.
And Mark, I think it was the 5th day down for this hog market after just recently scoring contract highs. Has this been profit taking, or has this been hedge pressure?
Well, the hog market has been going to the upside here for 12 weeks up. And in those 12 weeks, those summer contracts posted about an $18 gain. That is any way you cut it, that is a big move to the upside. Now, you've had at least your first little correction. So you were due for some type of correction. The other thing that came back in and got a little bit more on the negative side is the fund's net long position leaped to about 123,000 net long in the hog market. That's getting pretty rich, which means you got to basically, to continue to do this, you got to keep having bullish news all the time. And as soon as we got a little bit on some negative news, I think it's just more of getting out, profit taking, and it just just tripping over one another of get me out on this market. I do have timing. I think there's a low potential, could have been today. If not, I think somewhere between Tuesday and Wednesday of next week should be timing for a low to occur on the hog market.
We did put in a really bad chart day yesterday too, though, technically, didn't we?
We did on October, December, and February contracts are right now working on a potential weekly key reversal lower. So that is a red flag right now. I don't know if I want to jump on that just yet, but that is one thing to watch there. We really didn't do any technical damage on the front. In fact, actually, we've only got a 38% retracement. The move to the downside is only a 38% retracement of the entire move that started back in November.
All right. Thanks so much. Mark Schultz, Northstar Commodity. That is Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack Trait Technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.